So in the last video, we talked about why boom and crash traps traders before the spike. Now the real question is, how do you even know when the trap is finished? This video is going to be showing you guys the confirmation I personally wait for before every spike. You see, most traders like to predict the spike, but spikes are not predicted. They are confirmed. If there is no confirmation, there is no trade. It has to be that simple. There is no confirmation, there is no trade. Okay, so the model I'm going to be introducing to you guys in this video is the sweep, hold, and expand model. Okay, this is what smart traders do, but I'm going to be breaking it down in very simple terms, no big jargons whatsoever. Okay, so let's go to let me look at another area, another period when something like that happened in the market. This is the 4 hours time frame. Yeah, so I'm just gonna go. Okay, so let's look at this level. For example, we are looking at a key level first of all. So I'm going to make here my key level. Why is that? Because I have seen price constantly reversing at that level. See this rejection here, and a lot others. There were reversals here, even though it broke out a bit, and here, and then you can see that price consistently respected that zone for the longest, right? Sorry about that. So now that we've spotted out our key level, what do? We want to first of all allow price to sweep past that level. This is where this level right here, this is where most early traders get forced out. You can see what happened here. Price did not exactly, even here, price did not just respect that zone. Immediately price got to that line, that horizontal line, that level. It did not just go back up immediately, right? Instead, there was a false breakout. That's exactly what happened here again. And then what do you notice after the false breakout? You can see a major move. You can see a major move to the upside. And that's exactly what happened here again. A major move to the upside. Okay, so the sweep is not where we enter, right? You have to wait for price to sweep. The sweep is not where we enter. The sweep is where we start paying attention. So when you see price at your key level, you don't just jump into the trade. You start looking at the market from that level, right? That's when you start actually observing the market. Okay, so the next part, the hold, right? Remember I mentioned that we have the sweep period, and now we are looking at the hold period. This is the confirmation. Now we watch how price behaves after the sweep. After the sweep, what does price do? Okay, you can see that here, for example, you can see that after price broke this level, there was nothing. Let me go to a lower time frame so this will be clearer. Better. This is even clearer here. Now you see that price did not come to that line and just start buying immediately. Okay, sorry about that. Look at this major move here. This is what we are looking to catch. After this video, you want to be catching only major moves like this. So this is the line that was placed on a 4 hours time frame. Now you notice that after this break, after price might have swept that level, right? After price did this, you can see that price started falling, or price stopped falling aggressively. You can see how aggressive the market started dropping from this high. Okay, the market came from this high and dropped aggressively until it got to this level, right? And then after, this is the level that most early traders will enter and start buying, right? And start thinking that the market will start going up from there. But then there was a sweep of that level. Price came all the way down. And after that sweep, notice how the candles start slowing down. There is no much bearish momentum again at that point. Okay, so that aggressive fall does not happen again. The candle starts slowing down, the market starts ranging slightly, okay, and then it refuses to continue to break. If you watch the previous video, I mentioned that whenever there is a breakout, you have to confirm if it's a false breakout or if it's a real breakout. If it's a false breakout, that's when you take advantage of your key level. Okay, so here you can see that after the breakout, price does not continue to break. Instead, it came back to that level. And then what happened? It closed above, it went above that level and then closed around that level. If you look at this candlestick, you see that price closed. Let me take that up. Let me zoom that in again so that you see clearly. So you see that price managed to close bullish right where we have our horizontal line. Okay, and then what happened next? There was a fall. Okay, this was more like price creating a new structure. So here we have a new high. I'm just going to mark it out, right? I'm just going to mark it out. So here we have a new high. So this is the market telling you that the selling pressure is finished. That's the hold, right? That point is the hold. So we move on to the step 3. We move on to step 3, which is the expand. This is your entry opportunity now. This is where the market provides you with an entry opportunity. Okay? The expansion is the first confident move away from that zone. So you can see that after price might have broken this level and then couldn't continue to break, came back to form this structure, gave us this new high here, and then now price is expanding into that structure and eventually price broke that high here. This is the expansion I'm talking about. Price breaks this high here, and then what happens? Price is back to retest that high here. Price is back to retest that level around this base. So we don't enter our trade at the bottom here. We don't enter at the bottom here. Okay, we enter when price proves it wants to leave this zone and continue and reverse to the upside. That is when we make our entry. So no expansion, no entry. That's it. It's that simple. We don't want to have too many complicated analysis. We just want to focus on the sweep, the hold, and the expansion. So here you see that price came down to sweep that level, okay, and then eventually price holds that level, holds price, and then it came back up into that level, closed bullish, and then gave us a high, gave us a new high here, and then the expansion is after price breaks this new high. Okay, after price breaks this new high, now we see that this is where we get involved. This is where I personally get involved. If the market sweeps and immediately keeps running without holding, that is not confirmation, that is volatility. Okay, so we are not going to be chasing the market at that point. We are not trying to catch spikes. We are waiting for the market to show its hand first. Okay, this is just you being disciplined enough to follow 3 simple rules. And then if price expands, that is breaks that new high that just formed and then comes back to give us a bullish structure at that level, that is our entry. Okay, this is the difference between reacting to boom and crash and actually reading it. If you're a boom and crash trader, I want to be catching spikes, make sure you watch this video. Hey God, make sure you watch this video. This video is very, I'm not going to say much. Okay, so next time you see a setup forming, don't rush it, guys. Wait for the sweep, wait for the hold, and then trade the expansion. By that, wait for the new high. This is what I've been preaching all along. This is what I've been saying all along in my videos. Okay, so it's very simple. Wait for price to give you a new high, expand and break that new high, and then allow it to give you an entry, which is coming back to retest that level, and then you see a bullish structure. Once you see a bullish momentum like this, then it is your entry. That's your entry. Once you place a buy, your SL, your stop loss will be below this structure. Tell me, is there anywhere price came back to that level? No, price did not come back to this low again. Nothing brought price to this low again. Instead, price continued to go to the upside, and then you can see how much you would have made just trading the expansion. You can see how much. This is how far price had gone. This is how far price went. Price went all the way back to this previous high. So if you try to check from entering here, your stop loss here, this is a clear 1:3. That's a clear 1:3 right there. As simple as that. As simple as that, guys. If you have any questions, drop them in the comments and I'll reach out to you guys. Also, find the link to our free Telegram and join up. We have a 30-day 10% daily growth campaign that we are about to kick off. We want to carry everybody along, so make sure you join in and take a part so that you can equally see that trading actually pays. Okay, I'll see you guys in the next video.